Welcome back to Crypto Atlas, your daily source for crypto whale alerts, crypto market news, and DeFi gems. All right, let's go ahead and jump straight into the whale alerts because this is not normal activity. First up, we saw 19,002 Ethereum, which is about $55 million, and that moved from wrapped Ether into an unknown wallet. No exchange, no obvious destination. That's usually the kind of move that makes traders pause and say, okay, what's being set up here? Wrapped Ethereum unwraps don't happen randomly, especially not at this size. And then things escalated fast. Just over an hour later, another whale moved 20,768 Ethereum, that's roughly $60 million, straight from an unknown wallet into the Beacon Depositor. That's staking, that's long term conviction. And if that wasn't enough, just 2 minutes later, another transaction hit with 24,544 Ethereum, over $71 million, also going into the Beacon Depositor. Same destination, same behavior. That's not retail, that's coordinated capital. Now, here's where it gets really interesting. The next day, we didn't just see one more deposit, we saw a cascade 19,200 Ethereum. And then we had 17,280 Ethereum, and then again, and then we saw this again and again. So this was going on back to back, four separate transfers of exactly 17,280 Ethereum, all routed into the Beacon Depositor within minutes of each other. Same receiver address, same timing window. That's not noise, that's a whale or a group of whales executing a very deliberate staking strategy. So let's go ahead and speculate for a second because that's what we do here, right? This looks like institutional positioning ahead of something. When whales stake this aggressively, they're signaling they don't plan to sell anytime soon. They want yield, security, and exposure. That tightens liquid supply. Less Ethereum on exchanges usually means less selling pressure, and historically, these kinds of staking waves tend to show up before volatility expansions, not after. It also raises another question. Are these entities expecting protocol level tailwinds, fee changes, scaling improvements, or even broader macro shifts that make Ethereum yield more attractive than traditional instruments? Because when tens of millions move this fast, it's not guesswork, it's planning. And real quick, I just want to let you guys know there's a crypto exchange called BTCC. I do have a referral link down in the description below. You can pause the video if you want to read some of the basics behind this. And you can also join my Telegram group if you want to stay updated on the latest with these whale alerts. All right, let's go and move on with the news. This is where things start to connect more. So we're going to be focusing primarily on XRP now. So first up, XRP adoption just took another real world step forward. A major retail chain, Spar, over in Switzerland, announced it will now accept XRP for payments. This is not a crypto startup. This is everyday commerce. Groceries, real customers. That's how utility narratives actually form. Not through hype, but through checkout lines. And next, this one is massive. The US regulator OCC has approved federal trust charters for major crypto firms, including Circle, Ripple, Paxos, BitGo, and Fidelity. Let that sink in. These firms can now operate like banks. The crypto banking freeze is officially thawing, and that changes the entire regulatory tone. Infrastructure just got legitimized. And then we can take a look over on the ETF front. So Volatility Shares filed a routine update delaying the launch of its 2x XRP ETF to January 22nd, 2026. This is not bad news, it's housekeeping. The goal is still a Q1 debut, and leverage products don't get this far without confidence behind the scenes. And finally, we have Franklin Templeton's XRP spot ETF just crossed 100 million XRP in holdings, over $190 million. That's not speculative inflow. Excuse me. That's not speculative inflow. That's asset managers allocating at scale. We're talking big money moving quietly, deliberately, and usually that's when the real moves start. And as you can tell, it's getting me all choked up. So let's go ahead and take a quick look over here on the price charts. You guys can actually see that we've been having a pretty steady decline. This is specifically for XRP. And right now we have a little bit of a bounce. It took place yesterday at $1.83, starting to make a slight comeback up, but we can also see volume is still quite low. So the last time that we saw the volume itself actually spiking more was around December 19th, December 18th, the 17th. So essentially, right around coming up on Christmas time, everything's starting to go quiet. But it is in this lower zone of this Fibonacci retracement. So it's not good to be hanging out down here. It looks like it's got a lot more movement upwards it's going to need to do to try and break above that level of resistance. Whereas it's sitting here on the level of support, it doesn't take too much for it to drop below and potentially fear taking over even more. So because of the recent changes over in Japan, a lot of people were speculating that we're going to see the traditional trend of Bitcoin and other cryptos drop. And traditionally, I believe it's about 20% that they drop. So hopefully things will be different this time. I think a lot of people are on edge waiting to see if that plays out. A lot of people might be waiting right before the end of the year. A lot of people tend to sell crypto and then buy it right back so that they can do these tax write offs, claiming them as losses. We might see things start to climb back up again over the beginning of the year. But of course, this is all speculation. And if you haven't seen my previous videos, you can see this blue line right here at $2.46. That is where the spot ETFs for XRP first launched over in the United States. So that happened back on November 13th. And as you guys can see, the price for XRP has not been so great. Even though people were very optimistic about ETFs in general, trying to see how that price movement would actually react to it, overall, we've just been seeing things basically drop. There was a nice little push up here back on November 23rd and November 24th, but that did try to break through that Fibonacci retracement zone of $2.27. It got rejected. It attempted several times and just would not let it get back through. So after that, decided to go further down. Now here we are. We're testing this bottom. We do see what about 3 or 4 instances here back around November 24th to November 28th. So if you want to look at some trend patterns seen around 4 days so far on the cumulative zone, I would say here, going back on December 18th, December 19th, and then we have December 25th, and then now on, or I should say December 26th, as well as December 27th. So if you want to factor those 4 days in and compare it to previously right here, maybe that's a sign that we're looking at this starting to go the opposite direction since we did have that happen back here. But that is really, really reaching for it. Realistically, the fact that we're so far down below right here shows that there's a huge potential that this is going to drop down. And if it does, another major level of support to look at would be $1.40. I would say actually $1.75, $1.50, and then that Fibonacci zone at $1.40. So let me know what you guys think about all this. Share your thoughts with us down in the comments below. If you enjoyed this video and you're new, don't forget to hit subscribe. You can also check me over on Blue Sky at Crypto Atlas. And I really appreciate you guys. Thank you so much to my Patreon supporters as well as my YouTube members. God bless, and we'll see you guys in the next episode.